Welcome back, Idiot Squared viewers. This week, we're going to be discussing crypto pump and dumps, the legendary pump and dump that was initiated or implemented or actioned by a trader called Wolong. And he then published a PDF on how he did this called God.pdf. And it essentially goes through how market manipulation can be achieved. Sort of the key aspects. We're going to cover it all in this pod, so stay with us. This is very relevant to the times that we were in, and this could be some valuable knowledge for those out there willing to learn and take it on board. Polskar, I sent this to you. You've had a quick read already. Initial thoughts?
It's explained in a way that just makes logical sense. It's almost like, I don't know, it's a really nice like play-by-play of how these market manipulators do it. And the way it's laid out, you're reading and you're like, yeah, like this makes sense. Like it just seems like, how can I put it? I was telling you, if we were in a group together discussing how we were going to manipulate the market and we were formulating a plan, I feel like we'd eventually get to that same point. I was kind of telling you that before the pod, but yeah, I just think that it just makes complete logical sense. And it's almost like, yeah, no shit that that's what they're doing, obviously. Right. Yeah.
All right.
What about you? What do you think?
I think it's fascinating. This could essentially, this is a playbook for how to run a pump and dump, which is, it is what it is. These things can exist. They do exist. Are they good or bad? Are they right or wrong? Well, who the hell knows? But it is fascinating, right? So this could be considered a playbook. So we'll put a link to the PDF in the description so that anyone that wants to read along or get into this on their own can. But I'm going to kick it off. So in early 2014, a trader called Wolong created one of the first crypto pump and dumps by manipulating the price of Dogecoin. He wrote God.pdf, a document explaining his actions. That document is what we will be reading today. And it's really relevant, like really, really, really relevant to today and the markets and certain things that are happening. By sort of going through this and looking through this lens, you can look at the market differently. And hopefully that will help you to make more informed or better decisions that align with the outcomes you want to get, i.e. probably make more money. So I'll kick it off by reading the first few paragraphs. So he starts very simply. There's no title. There's no nothing. It's just called God.pdf. And he starts by saying, majority believes that markets move randomly and reflect the collective wisdom of investors. The truth is quite the opposite. The invisible hand is a myth. Market prices has always been manipulated by the government's visible hands through influencing laws and regulation. Insiders control markets and manipulate them up or down for profit. Manipulation is everywhere, undeniable and unavoidable. It happens on a very large scale throughout every single financial markets out there: stock, bonds, commodities, currencies, and so forth. There are other types of manipulation, such as social and news manipulation. Hence, I called it the game of deception. Whale watching is a trading strategy of monitoring the trades of the most influential or wealthy investors, known as whales. Whales refers to traders with significant bankrolls that their actions impact heavily on the markets. The purpose of this book is to trade in the shadow of the smart money, understanding how market manipulation works and become profitable by understanding. Most traders do not understand volume implications and how vital it is in their analysis of any of the markets. Given at any point of time, traders are constantly long, short, holding, some waiting to get into the market, some already in profitable positions. Long means when a trader buys, in this example, Doge/BTC, hoping that the value of Doge will go up against BTC. The short means the opposite. Whenever a trader is entered, the exchange will register this as volume on a continuous ongoing basis. Volume represents activity and it relates to the price bar on your chart. chart reflects clearly and is the reason why it is behaving the way it is. Whales contribute 70 to 80% of the volume you see, which is why it is large enough to alter the direction of a market. I will not go into identifying the trades of a whale activity in Book 1, but rather my primary focus would be explaining how manipulation works and the thoughts of a market manipulator. He's got in quotes from Sun Tzu. If you know your enemies and know yourself, you will not be imperiled in 100 battles. Okay, so he's saying that knowledge is power. Individuals
from the book
trade the
of,
market.
It's from the book of Art of War.
The Art of War. Yeah, correct. So individuals trade the market for a purpose, and that is to profit. Many of you are meticulous in entering a trade, cracking your head whether the price you are about to buy or sell is too high or low. Although some might possesses knowledge of technical analysis, you are still at a loss in the end. This is quite common. But you have not understand the characteristics of a whale. They are ruthless, swift, cunning, very, very patient, and most importantly, they do not obey the rules of the game. A price will never be too high or low for them. Prices might have soared 100%, 200%, and it will never be too late for them to enter. Buy high, sell higher. Sell low, buy lower. To almost everyone, it is simply just pump and dump. However, the truth is, there are many stages to make a pump and dump successful. The stages includes position building. So stage number 1 is position building. Stage number 2 is suppressing prices. Stage number 3 is test pump. Step number 4 is the actual pump. Step number 5 are shakeouts. Step number 6 is reallocation and distribution. And number 7 is exiting, also known as the dump. Welcome to Good Meals. I'm Ruben. I'm the founder and developer of Good Meals, and I'm here to introduce you to a smarter way to approach your diet. Forget the one-size-fits-all meal plans. Good Meals is about precision, personalization, and simplicity. It's not just a meal planner, it's a tool that adapts to you. Start by telling us about yourself. Your goals are unique, so should be your meal plan. Good Meals utilizes advanced AI to tailor every meal to your specific nutritional needs. Here's where it gets interesting. Our extensive database isn't just a collection of recipes, it's a culinary exploration. Whether you have specific dietary preferences or just what's available in your fridge, Good Meals finds the perfect recipe for you. And it's not just about variety. We focus on the nutritional value, ensuring that every bite takes you closer to your health goals. Join Good Meals today at goodmeals.health. It's not just about eating better, it's about revolutionizing the way you think about food. Because at Good Meals, every meal is a step towards a healthier, happier you. So, all pretty interesting so far. Anything you wanted to hit on or touch on or emphasize?
I had a question about these next paragraphs because so far everything, it sounds good, but the actual playbook, right? The actual steps I find the most interesting, and I have a question about number 2. So if you don't have any comments, Guy, keep going because I have a good question about number 2, step number 2.
So step number 1 is position building. There are multiple ways to build a position. This is the stage where we will require a significant amount of market share to do pumps. The most common method will be micro buys. Through placing of buy order in relatively small amounts, it avoids driving up prices and also masks our existence. Some alternate coins, however, has really low amount of volume, and it will take ages to build up our position through micro buys. In such cases, we will be forced to do a pump up to encourage sellers. Pump waves will be gradually decreasing, smaller and smaller, forcing out all sellers so that we can have what we want, market share. This has happened many times, in fact, to date, such as Doge BTC, Uno BTC, Dev BTC, and GLC BTC. Now, the only one that's still relevant, I think is Doge BTC. This was written back in 2014. So a long time ago.
Right.
Long time ago. Okay.
Especially
so,
that's like crypto years. That's like,
yeah,
it's like 100,000 years. Yeah. So,
okay. So you go.
Okay. So in step number one, if one of the techniques is to have these sort of I guess like it's like a micro pump, right? And when you have these sort of micro pumps, like if you're a whale, you're gonna, all right, I want to boost. I'm gonna buy now. It's at a low price. I want to boost it a little bit so I can get rid of some of the weak hands. So instead of like having a huge pump, you just have like a kind of a small pump, and then weak hands will sell, right? And then the price will come back down, and then you do another micro pump to try and get people continuously interested in buying in while you are continuously buying up all the shares at a lower price and building your portfolio of that share or of that crypto, waiting for your opportunity to exit. Basically, that's sort of the technique, right?
I think you got two things confused there. So they're trying to the whale, right? They want to have a lot of this token or asset, right? But they can't just go in and buy it all, right? Because that would cause massive price pump. Yeah. So they don't want to do that. They want to try and get in acquire as much of the token or the asset as possible, without paying a big price for it. Yeah. So what they do is he's saying that there's many ways to do this, but one way to do it is to do these micro pumps where you essentially buy a certain amount in. So you cause the price to go up. And then for some traders, that will be like, take profit. Okay. They're like, oh shit, I'm up 50% or I'm up whatever percentage. I'm going to sell here. Okay. So they're essentially shaking out the weak hands, is essentially what he's saying. And by doing that, it allows them to acquire more of the token or the asset at these lower prices and to build their position.
Isn't that exactly what I said, Guy? Word for word?
Yeah.
I feel like I said the...
Yeah, possibly.
So what parts was I confused?
Trying to stimulate people to buy. They're not trying to stimulate people to buy there. They're trying to stimulate people to sell.
Oh, yeah, you're right. Yeah, that's what I meant. Okay. Yeah, good call. Yeah, that's what I meant to say.
Yeah.
My
so
bad,
that's the only thing.
Yeah, you're right.
Think of it like shaking a tree, right? Like they're just trying to like shake the tree to get rid of the people who are happy to get like a small amount of profit or whatever, but they want to have those tokens and they don't want to let those people know that this is like super valuable or whatever, or that they're trying to build this big position, because then those people won't sell to them because they know they can sell for higher. So it's a method to sort of, just accumulate. All right. So that's position building, right? So that's the strategy they use to build position at these like micro pumps, right? Essentially just shaking the tree out, getting people to essentially sell their tokens. Okay, so then suppressing prices. Contradicting, isn't it? ? He says, that we are willing to pump altcoins up a few times of its value worth before driving down its prices. And yes, like I have stated earlier on, prices do not matter to us as long we can sell higher. I think this person might have been of Asian descent, just from the way that this is written. Okay. I'm going to start that again. Suppressing prices, contradicting, isn't it? That we are willing to pump altcoins up a few times of its value worth before driving down its prices. And yes, like I have stated earlier on, prices do not matter to us as long as we can sell higher. However, like every other business on the industry, everyone would want their costs to be as low as possible. In this very stage, we will pile up whatever we have bought to suppress prices as much as possible through sell walls that we are able to do our buying cheap. Our sell walls are usually just enough to appear as it's the invisible hand of the market, minus supply over demand. Okay, so that's fascinating. That we will be digging into this a little bit later, that suppressing prices, because that's a fascinating mechanism. The test pump, so stage 3. What?
I had a question about it, but you want to get into
All right,
it
let's
later.
go.
So
No, go. Let's go.
okay. I don't understand how the cell wall works. How are they able to do that? And what is that?
So if a cell wall would be if they have enough of a share, they can essentially suppress the price through selling. So like they can essentially think of it like it's constant down pressure on the price of the token. And the way that you can do that is by selling, right? Like selling drives the price down, essentially, right? So if there's more pressure to sell, then the price will go down. There's more pressure buying, it will essentially drive the price up.
So they're continuously doing micro sells in order to decrease the price, or to at least
maybe not micro
price?
cells. They're essentially just putting in cell walls, right? So they'll like make sure that the token can't get above a certain price because they'll just keep selling it down, right? So he starts off saying contradicting, isn't it? Because it's like the opposite to position building. But like once you have the position, then you can create this price suppression. You can suppress the price. Like once you have an adequate position in the token, you can then start to artificially suppress the price of this token. So that's the contradiction. Is like you spent this time building your position, acquiring these things, but now you're going to spend some time actually like selling them to keep the price down or to get the price down. We will dig deeper into that. But it is
that's
contradictory
really
to position one. Yeah, so it's like one step forward and then one step back. All right, so step number 3, let's do this, the test pump. Before a real pump happens, whales like us tends to test the market. Why? Reason is simple. It is to ensure that we have absolute control of the market. Test pump. Like shakeouts, actual pumps, reallocation and distribution happens many times throughout the pump and dump process. By doing a test pump, we will roughly get an idea on where our next resistance will be and how much floating chips are around. Floating chips refers to weak hands. Whales hate weak hands. They do not act as any form of support for us during a pump, and we are always determined to get rid of them in the early stages, no matter how long it takes. So this is relevant to that position building as well.
Kind of funny that they're not feeling the weak hands. It's part of the process, part of the game, and that's how they're able to buy such large positions at a lower cost. It's because of weak hands. So it's kind of funny that they would. Well, in a certain stage of it, it's annoying, but another stage of it, it's very beneficial. So it's like a love-hate relationship with people with weak hands.
Yeah, absolutely. But what he's making the case for how they don't support the whale's objective, right? And that's fair. Like, why would they want to support the whale's objective? It's not really going to help them. It's going to help the whale. So absolutely.
In position building, though, it definitely helps the whales.
That's right. That's why they're trying to. It creates the opportunity, and then once they position themselves, they're trying to get rid of them because the weak hands don't support what the whale's trying to do, essentially.
Right.
Okay, so now we go on to, we'll just finish with that last bit. No, he says, whales hate weak hands. They do not act as any form of support for us during a pump. We will. The English is terrible. And we are always determined to get rid of them in the early stages, no matter how long it takes. So he's saying that the whales are determined to get rid of them in the early stages, no matter how long it takes. So that's that initial phase. That's when they're happy that the weak hands are there. And then they're trying to get rid of the weak hands because they hinder the progress, right? Okay. The actual pump, the term pretty much explains everything. When weak hands are being forced out and we have gain, the market share that we expect, we are ready to move. Okay. Next phase is shakeouts. So a shakeout is a deliberately forced price reaction. whose purpose is that of stimulating public selling in order to facilitate the accumulation of speculative positions. This is the most aggressive part in wiping out weak hands of their positions. Sometimes during a shakeout, we can be so aggressive that we drive prices so low that it's way below our cost price. Losses does not matter to us. It is only on paper, and we have enough bankroll to pump prices back up. Individuals who have no experience or are unable to withstand such psychological torture will usually exit the market at this stage. Oh, brutal.
Guy, 100%. That's why patience is so important in investing, man. You can never rely on short-term investments. Like, it is what it is.
It's crazy.
You always say something. You have a good saying. You said it a couple of times about that.
About patience.
It's something
play the long term.
Uh-huh.
There you go.
Yeah, there's a saying that you've said before. It's like, what was it? That the whales are just banking on, I don't remember how you put it, but they're banking on people running out of patience, basically. Right?
Yeah. So there's a couple of different things that you can summarize it. So markets are a funnel from the impatient to the patient. Right? So
something like that.
Markets
something like that.
Essentially take people that are impatient and funnel their money to people that are more patient. So they have longer time horizons. But it's also like a case of like, the house never loses in a sense, right? Because they have a higher, like they can print infinite money. The house never loses because it's a game of probabilities, and over a long enough time horizon, the probabilities never favor the individual. They always favor the house. There's many things. We can get into this. There was one that I want to say though, that is possibly a new one that I haven't said before. But if you want to be truly free, right? We talk about free will and all this sort of stuff. If you want to be truly free, you have to live in the jungle, right? But the jungle is brutal, and violence is the base layer. Okay, so you can die in the jungle, right? If you want to live in a controlled environment and have sort of more, guaranteed safety, you live in a zoo. But if you live in a zoo, you're controlled and you don't have free will. So you can trade off danger for safety, but what you're also sacrificing is free will. And the markets are a jungle, right? There is no guaranteed safety. And so like it's brutal out there. And that's what he's outlining, this psychology here, right? Like losses don't matter to us. It's only on paper. And we have enough bankroll to pump prices back up. Individuals who have no experience or are unable to withstand such psychological torture will usually exit the market at this stage. So it's like people venture out into the jungle. Once they see the harshness of the jungle, they run back to the zoo. And that's what he's saying is like, because most of these people live in the zoo, they're essentially predictable, and then you can control them. They actually like want to sort of be controlled in a sense. Anyway, that was a fun one I heard that the other day on a show. I can't remember the name.
It makes
anyway,
you kind of.
You go.
It kind of makes you like seeing it from that perspective. I don't know. It makes it a little bit more tolerable, I guess, is the word. If we're giving up certain freedoms to have more safety, that's interesting. Yeah, because probably
I want to be in the jungle.
Yeah. But it is interesting to think about because we do live probably in the safest times in the history of humankind, but also there's lots of regulations, rules, and bullshit at the same time, right? But we are safe. That's interesting.
100. Yeah, but that's that trade-off, right? So if you live in Canada right now, dude, you can't even say something that's hateful about something. You could get life in prison.
Dude, communist country.
For that safety, what are you paying for? Like, you know what I mean? Like for that safety, you're sacrificing. The craziest thing about all of these things is in the limit that like, it's terrible. Like, you know, you're in the zoo. Yeah. You're safe, but you're also like, it's not really safe. Like, it's also dangerous. So pick your, it's all hard, right? Pick your heart. For me, I want to be in the jungle. That's why I like this PDF. I think it's fascinating and an insight into just the brutal harshness and reality of the markets and of things. Okay, so let's keep going. So we've done shakeouts, right? Now we're on to the next step, which is reallocation and distribution. So reallocation and distribution usually serves the purpose for us to rebalance our portfolio. In a test pump, we might use some of our shares, coins. The logic is quite simple. Sometimes during a pump, buying into our own walls and others, we bought more than expected. We'll have to release a few back to the individual traders. At times, it serves as a support and reduce our risk exposure of being a safe trap. What do I mean by that? Well, for example, if you were to distribute you at $5 and then we were to drive prices back down to $4.50, we will know that the total amount of shares being distributed at $5 will not be selling at $5. Traders tend to exit when in profit and are unlikely to exit with break-even costs. I use the word safe because this is not the part where we will be dumping. There are a lot of reallocation and distribution, like shuffling a pack of cards throughout the entire process. And prices tend to go much higher than the price that you are trapped at. Okay, so then the step, exiting, the dump. This is usually the last stage, the part where we take our profits and completely exiting the market. There are many exit strategies available to us. I will be revealing some of it and explain. The most common mindset everyone had is that we either micro sell or massively dump into buy walls during a dump. These are just the basic. Usually by exiting via this method gives us a really bad price to sell at. Okay, so he's saying like, just dumping everything on the market typically results in not ideal profit margins, right? Because you're essentially, by selling mass tokens at once, you're driving the price down as you're selling them, which means that you're every sell you're cashing out at a lower price than you otherwise would have been able to. Okay. One of the exotic methods we used, exit during a pump. This works by having sell walls in place and buying into our own walls again and again aggressively until the crowd follows. Once they follow, they will be biting into our walls. Hence, we are able to exit portions of it bits by bits, rinse and repeat a few times. We will be able to exit the market completely. Another method is known as exit by putting a sell wall. Well, many of you who follows my trades on Dogecoin market know that I like having sell walls up to suppress prices and buy Doges cheap. However, I am able to imply this strategy by deceiving everyone into thinking that I am merely capping prices, but the fact is I am micro selling my way out. So that's quite interesting. Anything you want to unpack there?
If whales have like 70 to 80% of the share of any given share or coin, and they want to completely exit, that's going to have a significant impact on that share price, right? So they're hoping that they can do these what they do is these micro sell-offs where they sell a little bit and then people are coming in and buying it, which is inflating the price again, and then they sell and, like I said, rinse and repeat, right? But if these whales have 70 to 80% of the market share, how can the other 20 to 30% support that high price in order for them to exit completely at a high price? You know what I mean? It's almost like the math that doesn't work in my head. Does that make sense how I said it?
It does make sense how you said it, but it's really simple. What they're actually trying to do is alter the psychology of people in the market, right? They're manipulating the way things appear to people so that it gets them into like a frenzy, essentially, right? What they're trying to do is to create enough interest in something. They're trying to make it like, so everyone's got an idea of why or how things work, yeah? And what they're trying to do is they're trying to, essentially they're running, like they're producing data, which is like, token, like lots of buys going up and then prices coming down and like this kind of dynamic. They're trying to simulate a dynamic that then gets people to go, like I'm right about this. This is going to keep going up because of this reason that I have, right? And then people then they get convinced that this is what's going to happen. Oh, this token's going to go to the moon, right? I'm right about it. So then the people then start to aggressively want to buy in. As they're buying in, they can then start to sell into that. So essentially what's happening is if you've got 80% of the market and 20% here, you're trying to get this 20% and then other people interested. So that then essentially what you can do is you can then transfer your tokens to these other people at the highest price possible. And the way to do that is to essentially, psychologically manipulate them into thinking that this token is going to the moon and then it's going to be this new big thing because, in their mental model, they know exactly why this is going to work. That kind of makes sense?
Okay, I think, yeah. But I think I'm maybe thinking about it in the wrong way. So 70 to 80% of the market share is owned by whales, right? But that doesn't necessarily mean that we'll just use BTC as an example. But that doesn't mean that 70 to 80 but it doesn't mean that they're going to be allocating that much of their market share to one coin. So they do allocate a significant amount, but there is still enough 20 to 30% to support those micro sell-offs, right? So I think I was kind of thinking about it differently, because imagine, I'll try and say this more simpler. Imagine there was only BTC in the world. That was the only thing you could buy, right? And we had between us 70 to 80% of the market share of BTC. 70, 80%, like we own that. It would be impossible for us to do that strategy, because we can't expect 20 to 30% of the market share to support those micro sell-offs. But because we have our money distributed amongst many shares, we're allowed to do one stock at a time, because the 20 to 30% of people coming in, because we're gaining traction with this technique, and people are selling off other stocks that they have to come into this one, because we're playing the game with this one specifically, that we can sort of utilize that technique for it to work. Do you see what I'm saying?
Yeah, but what are you saying? Is it a question or is it a statement? I'm confused.
I think I answered my own question, guys. Sorry about that. All right, I'm good. I'm good. I answered my own question.
You're trying to stimulate a feeding frenzy, right? You're trying to create. It's psychological manipulation, but you're trying to create a data that can be interpreted by any actor in the market, and give them a reason to think that the price is going to go up and they're going to make a lot of money, or something, like along those lines. Essentially, I think is the goal of this, right? So exotic methods exist that we used. Exit during a pump. This works by having sell walls in place and buying into our own walls again and again aggressively until the crowd follows, right? So they're trying to simulate this movement in the market to try and get people's attention, right? To try and get them interested into what's happening, so that then they can tell themselves a narrative and be like, oh, look at this volume, look at this, like it's getting suppressed, like this thing's going to explode. Like there's so much more interest coming online, like this is going to moon, right? Like, okay, cool, I'm going to get in here. That kind of makes sense. And then as that frenzy builds and more people start to rush in, that's essentially their exit liquidity, right? As the data entices enough people, the movement of the market entices enough people to come in, that's when they can start to sell into these new buys, right? So they're just essentially transferring their share. That kind of answer make it simple, or do I confuse you?
No, that I wasn't confused about that. I was confused about something else, but then I answered my own question.
Okay, can you illuminate the confusion? Let's so we can maybe some of the listeners were confused as well.
It was just like it was an issue of math. That was the confusion, is how can if the that's it. But the way I sort of answer my own question is understanding that we're not just talking about one share. We're talking about a distribution of money amongst many shares. So you could sort of do this, this playbook. You can apply this playbook to one share at a time. And there is enough support from the 20 to 30% in order for this playbook to work, right?
So I don't know if it's one share. I'd say like one asset or one token or one thing, because it's not, it doesn't exist in a closed system, right? There isn't just that one market. Like the narratives can be formed to pull other people into this market, right? So that's how they're essentially capitalizing on this. They're creating a feeding frenzy, essentially.
Yeah, there's enough wealth for you to apply this playbook to probably a high number of assets at a time, but you can't do it to all assets. That's kind of like where I was going with this.
Yeah.
You could only do it to a select ones at a time for it to work.
Yeah. Okay, so exposing and unraveling the secrets behind my pumps and dumps. By now, everyone should be curious, and if not, dying to find out how I orchestrated my pumps and dumps, especially with Dogecoin. I will give a very detailed account on what actually happened and how I played the game of deception using the art of war to my advantage. I must admit that I got into Dogecoin a few weeks late. That was when prices were trading at about 120 to 140 Satoshis. I started out with only a few MH over S, and GPUs were really hard to get. Prices fell to 90 to 80 Satoshis. It appears to be normal to me at first, but something caught my attention. Things were not right. Based on years of trading experience I had, it seems to me that someone is intentionally suppressing the prices to buy in Doges. There are whales playing around with Dogecoin. Well, like many others, I seized the opportunity by contacting my ultra-rich friends to be involved in this pump and dump process. Doge was dead cheap. Everything was right. The increasing growth in subscribers on Reddit and the tipping community were a perfect condition to manipulate Doge prices effectively. The fundamental factors and elements determining the outcome of a military engagement. A battle is won before it is even fought. All the conditions were met: pricing, volume, the community backing it, and the growth that is gradually increasing. I heavily bought into Dogecoin 26 to 50 Satoshis. So he's saying he paid 26 to 50 Satoshis. Satoshis are the smallest unit of Bitcoins. I can't remember the math on how many Satoshis are in a Bitcoin.
Oh, I have no idea. I don't remember that guy. This is a mad interesting story, though. Yeah, no worries. This is a mad interesting story, though. How he did it with Doge, this fucking meme coin that's now one of the biggest cryptos.
Yep. Okay, so there are 100 million Satoshis in one Bitcoin, right? So he's talking about Dogecoin way back when it was like nothing, right? Because Bitcoin wasn't worth much back in 2014 either. Okay, so this is like incredibly cheap. Okay, I heavily bought into Dogecoin, 26 to 50 Satoshis. I shared my trades on hashtag Dogecoin at first. Why? Simple. I'm a nobody there. I have expected and predicted that no one will listen to a trade recommendation by someone new. In there, I will not affect any of my position building, but rather gain me some sort of fame and reputation for future use. Mad key point there, right? He did this. No followers, no one's paying attention to him. He wasn't trying to do this to influence anyone's opinion. He was also banking on the fact that no one would listen to him because he's like new to this and he's a nobody, right? But what he was doing, he was sowing the seed for future, right? So he was playing a really long game here. He's by doing this.
What about what part? On that part? I call bullshit on that part. I think he said the story that way after the fact, but I don't think he was thinking that. I don't think that was pre-planned. I think this fits well into the story. But I call bullshit on that part. I don't think that's what he was thinking as he put that message up. I don't think so. You know what I mean? I think he made that story after the fact. But
I think you could conveniently make that story after the fact. But I think like given how this plays out, I think that there is some credibility to this. And the reason I say it's a key part is because this is actually how you want to do it, right? Like that's actually what you want to do. Like don't put a trade out there and hope or expect that everyone's going to be like, oh yeah, I'm going to this guy's a genius or whatever. It's all of these things will only be obvious after the fact, right? But by doing that, by being able to gain some sort of fame and reputation for future use, if it's successful, is incredibly valuable. Right, like it's an important step to make. So you knowing that this isn't going to be like this post isn't going to make you famous now, but after your actions in the future, this post will make you famous or help you to gain fame and gain notoriety. Also, reinforces your ability to influence the market, right? Because then you have more attention on you, right? So it's a mad key point. Whether or not he, did this intentionally or not, it's still a massive, important point, right? To sort of call your shots so that in the future, if they do hit, you can go back and say you called it because everyone will think you're a genius, right?
That's how these experts become experts, Guy.
Yeah, absolutely.
Make 1,000 calls, one of them's gonna hit eventually.
There's a very famous scam where people will like they'll have 2 TikTok accounts or whatever, and on one account they'll bet that the stock goes up, like they'll massively leverage themselves and bet that it's going up. On the other account they'll bet that it goes down, and then based on whichever one actually works, right? Because it's got to go up or it's got to go down. Based on whichever one actually works, that's the one they'll post and claim that they're a genius. And you can do this over time and rinse people. Like seriously, this is a huge thing with trading. Like mad people get caught by these scams. So we digress. So let's go back. So it will not he goes, by posting it here, he's someone new, no one's going to listen to him. It will not affect my position building, but rather gain me some sort of fame and reputation for future use, right? While Dogecoin hits 50 to 70 Satoshis, the truth is I did not own 10 billion Doge, but rather a mere total of 4 billion. The amount of holdings I had were overstated so as to aid me and mask my exit strategy in the near future. Now came the part of Jamaican bobsled team. This is where it gets mad interesting. It was a perfect time for other whales and myself. We signaled through buy-sell walls that we are ready to move. It was a test pump. We wanted to see if the Dogecoin community were gullible enough to think that it was the Jamaican bobsled publicity that have drove Dogecoin prices up. The bobsled team brought value and publicity to Dogecoin, but people are always confused with prices and value. Having value does not mean having a price, and having a high price does not mean it has value. In the world of manipulation, we used the news, the social network, as our advantage. We were right. By driving up prices, the community gave credit to the bobsled team for moving Dogecoin prices up, which is what we wanted. Right? So they manipulated the market so that people sitting on the sidelines saw this Jamaican bobsled stuff about Dogecoin, and then in their mental models, they go, oh, the bobsled team is driving this price increase. Like because they've brought attention to this, that's why the price is going up. It's because more and more people are finding out they want to get into it because of the bobsled team. When that wasn't the case, it was the whales manipulating this price and this price action. And so that's what he's saying. Are these people gullible enough? And it made sense in people's models. They're like, oh shit, this is going to blow up because the bobsled team. Let's get in.
Interesting. This is making me think about a couple of stocks that I've been taking a look at, because there's been a lot of hype around what's the energy? Hydrogen, right? Hydrogen energy in Germany and in Canada. I don't remember where else, but there's all this hype behind it that they're going to start utilizing it and mining it or mining the necessary minerals or whatnot to make hydrogen and start really ramping up the use of hydrogen in energy, right? And this has been going on for a couple of years now, where like news articles will come out talking mad shit about how hydrogen is the future. There's been a lot of doubt prior to that. I think, I can't remember, I don't want to say Elon Musk. I don't know if it was him, but a big billionaire was saying that hydrogen is likely not going to be the future. And that took place before some of these news articles were coming out within the last 2 years. And if you look at the stock prices of hydrogen like companies, they've been decreasing very slowly over the last couple of years. They took a huge hit a couple of years ago, but then since then, they're just slowly decreasing. And I was having a conversation with my dad about this. I'm like, I think that they're like manipulating the market. I think that they're trying to suppress the price and they're slowly buying up a lot of it, because if it really is the future, right, then why isn't there more buys? Why are people buying in now? What's going on? I think it's straight market manipulation. And then I'm thinking like, well, fuck, it's the fucking news. Like, who knows? Like, the news is all fake anyway. It's all bullshit anyway. So these news stories that are coming out hyping up hydrogen, it's probably all bullshit. And I'm just like getting all caught up in it. So now I'm like rethinking everything that I've been thinking about these hydrogen stocks over the last couple of years. It's like, fuck, am I the idiot? Or no, I'm definitely the fucking idiot. But I'm just trying to figure out how, if it's the right move to buy in now, as if I could be right or no, or negative, guys. So anyways.
Okay. So I think we'll cover this a little bit later, right? We can use your example. We'll get through the rest of this PDF. We're almost at the end. And then we can discuss, right? So there's a couple of things to hit on with that, which is just like, it's probably manipulation. Whether or not it is the future or not, that's something we have to look at through multiple lenses. And we can't predict the future with complete precision. We can, it's low precision, right? It's impossible to predict the future perfectly for these kinds of complex systems. But we can go through ways to have better approximations. Okay, so we'll go back into the Jamaican bobsled team and the price manipulation of Dogecoin. So he goes, having value does not mean having a price, and having a high price does not mean it has value. In the world of manipulation, we used the news, social networks to our advantage. We were right, but by driving prices up, the community gave credit to the bobsled team for moving Dogecoin prices up, which is what we wanted. Over the course of a week, I began appearing frequently on hashtag Dogecoin and hashtag Dogecoin market, giving trade calls and announcing pumps. To cut the story short, I turned aggressive, driving prices up to 280 Satoshis, where the crowd bought into my sell walls. I was able to exit near 270 Satoshis, a portion of my Dogecoins. I wasn't done with it. Driving prices higher will put me into a risk of buying Dogecoin high and unable to exit safely. This is the part where I gave everyone on Dogecoin market a floor, 160 Satoshis, a precise floor that I will support, and 230 as resistance. I moved prices up and down within this range to gain confidence and support from the community that I am backing it and able to control the Doge prices at will. Then came the part of which I needed more faithful followers who will ride this waves with me, guarantee a few profits, and act with me. Why? Reason is simple. I sold most of my Doges high and I have lost a significant amount of market share. I need to regain the market share without physically possessing it. All right, so that's mad interesting, right? He's actually getting other people on board who have Dogecoin market share, who will act in accordance with him because he doesn't have that share. right? He doesn't physically have the Dogecoins, but he can get other people on board with him, support his actions or mimic his actions. Okay, so then he goes on to say, the most memorable event that happened during this phase was that 4chan and Reddit laughed and mocked the Molly machine, one of the guys in my private channel. Logs leaked on the internet showed how the Molly machine was bleeding at that time when someone big dumped Doges into his BTC buy walls. I had to change a course of actions to move Doge down to 170 Satoshis, and with a target price of 130 Satoshis in mind. I forecasted that not everyone will act accordingly as they have no idea of what a short sell is, sell low and buy back lower. One example in this case, which is Freenode user HINV. The purpose of me initiating this without giving a clear explanation on what we are doing to followers of mine, which holds no knowledge in trading, is pretty clear. I knew and had reports from my OPs in my channel that Freenode channel is not secured. Anyone would be able to spoof a nick that is on the invite list to freely enter that channel when the tick is not in used. I took advantage of that again to create chaos and leak logs that I failed in the dump, of which after the dump failed to 170, I drove prices back up to 190. The purpose of this was crystal clear. God bless you. I need someone to buy into my dumps high while slowly driving prices to 130. To those who are in the private channel, especially ops such as Random Clown, Tuxadage, Sir Negros.
I can't believe he actually enlisted the names in this.
This
post.
guy's
this is mad funny.
Thing is hilarious. It's Sir SIR _ KNEE _ Such Wow and Tanner would have clearly known that 130 will be the 130 Satoshis will be the bottom price. Tanner appeared to be more excited. He had a bet with me earlier on that prices will hit 80 Satoshis, which I told him 130 Satoshis will definitely be a rock bottom. Now, remember the part I have told everyone that I had no access to investors' funds during the holidays of Chinese New Year for the traders that listens to my order to buy or sell ROA. And the part that I stated Dogecoin will be trading above 200 Satoshis once Chinese New Year ends. Yep, you now recalled. Well, I orchestrated another plan, which is to move my people inside my private channel to UNO BTC, for I saw value in UNO and were at a good price to buy at. This serves two purposes. If they are out at 160 and bought in UNO heavily, it will be less selling pressure for me to exit my investors' funds. At this point of time, investors holding Doge are not yet fully sold. To others, it might have appeared that I used my members into selling Doge BTC and UNO BTC, but apparently it is not the case. I gave them the chance of buying UNO BTC at a lower price. Having sufficient time to build up their position for UNO BTC has much greater potential and without worrying that they will be affecting my dumps on Doge on a later date, killing two birds with one stone. Now, halving date for Doge is now nearer and nearer. People are gullible and naive, thinking that during halving, their Doge prices will be worth double of the initial will be worth double of the 280's initial tops. That's 280 Satoshis. They've forgotten that it is us, the whales, that drives prices up. Again, they fell for the deception that I long for. Near halving day, what a perfect day for my dumps. I will have a lot of people that will actively and happily buying out whatever I dumped to them. On February 12th, I dropped the nuclear warhead. It was what I expected, and I managed to exit my position entirely on Doge. Sad but true, I used all bad news on me as an advantage to maneuver and engage the opposing force. And to those whose losses out in the end are usually my haters because they are the ones that are arrogant and acted late. People in my private channel knows how I trade and usually holds even though prices are being suppressed or shakeouts by me. It is usually the people without patience that lost in the end game. That's how he concludes.
Damn.
Now,
that's a great story.
it is. There is a little bit to untangle in that back end there, how he was getting people to exit the Doge into the Uno, which was essentially allowing him to build up his position even higher, and a bunch more. But yeah, what a fascinating story. Anything you want to hit on? Anything you want to discuss?
Yeah, he kind of is incriminating himself. Isn't it illegal to manipulate markets?
Yeah, apparently, but like this is what happens everywhere. So like, yeah.
No, I know, but like, if someone wanted to investigate, they could probably find this guy. I mean, he narrowed a few things down, published a couple of names. He probably.
Well, what did he do? Do you know what I mean? Like,
yeah, I do know what you mean, but it is, huh? I mean, you're right. There isn't any insider trading going on. It's not like he's getting information that he shouldn't have. He's just utilizing whales to manipulate the price. But I don't know, like it is that, I guess it's legal. I don't know. I don't really know too much about the laws surrounding that, other than insider trading is illegal, and doesn't sound like he was doing that, but he was definitely manipulating the market, which is hilarious. But yeah, I guess you can just do that.
Well, so if we go back to what he says, majority believes that markets move randomly and reflect the collective wisdom of investors. The truth is quite the opposite. The invisible hand is a myth. Market prices has always been manipulated by governments' visible hands through influencing laws and regulation. Insiders control markets and manipulate them up or down for profit. Manipulation is everywhere, undeniable and unavoidable. It happens on a very large scale throughout every single financial markets out there: stocks, bonds, commodities, currencies, and so forth. There are other types of manipulation, such as social and news manipulation. Hence, I called it the game of deception. So really, what he is guilty of is understanding the game. And what you could condemn him with doing is playing the game better, right? Like,
yeah,
he
which
just
they don't like.
No, it sucks losing.
No, I know, but like when the government,
he had a better model. What are you saying about govs?
Well, when they manipulate the market, it's all right. You know, I mean, no one's going to get in trouble. And when really rich people who are, you know, with the right people also don't get in trouble. But if like a little guy, like this guy, manipulates the market, it's usually an issue for them. You know what I mean? That's all I'm saying.
Specifically, it becomes an issue if you make the powers that be upset, or if they lose relative to you, then they're going to get pissed off, right? But essentially,
GameStop.
all he's guilty of is actually playing a better game, right?
I love this story.
A different model for how things worked, and he was in the market testing his hypotheses, coming up with strategies and plans, playing a longer game, and then executing his strategy over a longer time horizon. And because of that, apparently was able to do pretty amazing things. So I think this is from like 2014, the trade stuff. So do you want to have a look at the chart from 2014 for Doge?
Yeah.
Do you want to get it up?
Do you want me to bring it up?
A screen share. Yeah, I just got to get a couple other things.
Guys, so basically, he wrote a playbook for anyone who knows a bunch of whales. So all you got to do is find a couple of whales that trust you, and you can sort of attempt to do something similar.
Whales are relative too, right? So Bitcoin whales are much bigger than like some, $5 million market cap token. So you could be a whale in smaller cap stuff with smaller size, because the relative amount of money in that token is much lower. So you don't even need to be like, super rich or anything to essentially replicate this strategy. You've just got to find the opportunities where you can do these same things at your scale or your size.
This does. Sorry, this doesn't even go back to 2014.
Oh, yeah, we got to get a chart. Surely
All
there's
right,
got to be a chart that goes back to 2014.
Yeah, I'm gonna do some better investigating here, guys. Give me one sec.
It's all right. We can edit this bit.
Okay, so here it looks like it's right here then. Like what month is that? Okay, so January? No. Oh, that would be January. And then it peaked in February 12th, 2014. Yep. That's what he said, the 12th, remember? In February. He mentioned that in the story, that the 12th of February was the most memorable moment because 4chan and somebody else were posting some shit. Remember that?
Yes. Hold on. I'm trying to find it. Right, but let
me see if I can zoom it even more.
I don't.
I don't
know if he mentions a date.
Or is it doing whatever? Yeah. You see, it looks like I can't. This fucking number's in the way, but it looks like I think maybe.
Oh yeah, on Feb 12th, he dropped the nuclear warhead.
Yeah, and that's exactly when that's when the peak was. Boom. And then look, you can see 10 days later. And then it hits March 27th, so like a month and a half later. And then it reaches the bottom here 6 months later, 6 months and a half later.
So he spent like essentially winding up like potential energy in the system. And then like as it starts to spin up, more and more people start to get sucked in, pulled into this vortex, right? Boom, boom, boom. He's sucking all these people in, creating all this interest. Everyone's coming up with these narratives in their head. They're like, this is going to do this. This is going to be this. I'm going to get in. And then all of a sudden he's just, he's in the background. He's essentially accumulating all of this power, all of this understanding. And then, like you said, on Feb 12, he just dropped the nuclear warhead and he just like, bang, starts exiting his position as more and more people start coming in. And then obviously what's happened here, you can see on this chart, is that like, that as he starts dumping these massive cells into the market, people initially start absorbing them, but then the rate at which they can absorb them is outweighed by the rate at which he's dumping them. And then people start to catch on, then they start dumping, and then everything just sort of goes to shit. But I wonder how much he was able to get out.
I was thinking the exact same thing. But look at the 24-hour volume at the peak there, 5.64 million. So he probably made a pretty good bag, but it wasn't something he could retire on. You know what I mean?
Well, yeah, maybe. Depends on how high your burn rate is. But yeah, so he was able to exit his entire position on Doge. So he was able to get rid of all of it. That's fascinating, right? So yeah, anything you want to hit on? Anything you want to discuss further on this?
I don't know, guy. I was just thinking about the price, how in comparison to what it is now. Like back at that peak when he sold, 0.001817. It's like 100x since then. 100 or 1,000? 100, right? Yeah. I think. No.
I think it's probably 1,000x.
Yeah.
At least.
Something like that. I don't know.
What is it? What was it there?
It was 0.0001817. Yeah, 301817.
Yeah.
And then, guy, in 2021, what is that? January, February, March, April, May 14th, it reached $0.50.
That's
$0.50.
insane. So, like he was able to initiate this pump and dump, and he achieved his goals on that time scale, right? But also like crazy over a longer time scale because of all of this market manipulation, everything else, like and inflation and money printing, whatever else. His position would have been worth a ridiculous amount as well. So that's also something interesting to consider.
I'm wondering how many times he's done this since.
Yeah, who
Maybe
knows?
some more
How
stories will
many
come
other
out.
PDFs are out there that that outline this kind of stuff? I don't know. That's mad interesting. But it gives
Yeah.
a pretty it is actually a decent rundown of how to do it, and the psychology of it. But it's interesting because it's very multifaceted, right? Like you have to keep many moving parts in your mind going at once, and you have to be very clear on your mental models. Like you again, if you frame the problem in this way, the way that he's presented here, it gives you a framework for understanding how markets can work or maybe do work. And by being able to adopt that viewpoint, that reference frame or that model, you can elicit levels of control, essentially. Pretty fascinating. So what are you going to do it with?
That's what I'm thinking about, because we need a coin that hits all those requirements, right? Because like Dogecoin was just in that perfect spot. But also we're talking about 2014, right? Like you could do it with like a meme coin or a shit coin now, right? You could probably apply that technique to a much I'm wondering what's like the limit scale, because let's say you have a meme coin and you have 130 buyers or whatnot. Like you might not be able to do that with just 130 people. You would need, a significant amount more investors, because it doesn't seem like a large enough pool in order to use that playbook. You know what I mean?
Potentially. No, I think this could sort of be scalable, right? So if the market's smaller, then the amount of capital or liquidity or, like money you need is lower. The bigger the market or the bigger the token or whatever, the larger the bag size you need, right? So I think you, in theory, should be able to replicate this with a very small bag, right? It's just probably going to be slightly harder to find or get in front of enough people to spin up the hype, if that makes sense.
Yeah,
so part of what
that is
helps
the issue.
is by having a big bag, you can take advantage of what's popular in society at this current time to then to do those manipulations. So you can you're just running it at a larger scale. And then, but yeah, I think this could be, it would be replicatable on smaller tokens, assets, whatever. With a smaller bag, it would just again, your upside's capped essentially. I think you probably, you can't have as big a payoffs, but you could, relative to your bag size, you could still get decent outcomes. I don't know if that answers your question.
Yeah, I think because the hype, right? If you have a very low amount of investors, it's going to be difficult to create that sort of hype that necessary in order for it to work, I think.
Yeah, I'd say, and holders, just holders in general, as opposed to investors, because I don't know if a lot of this crypto stuff is actually investors or just people that are just trying to make money.
I know.
I don't know if we classify them technically they're investing in something, but I don't know if that's I don't know if that's how they're thinking about it. But yeah, any closing remarks?
if anyone knows any billionaires, you'll let us know so we can try and get them to trust us enough to do the exact same thing. Or maybe not even billionaires.
All right, bud. Let's hear your sales pitch, right? So these millionaires and billionaires are going to give you money. How are you re-implementing this strategy, big boy?
Well, first I'm going to have to study it much more in depth because I don't know nearly enough of how it works to actually execute it. But I think between the two of us, we could probably, over the course of some good amount of time, we might be able to come up with a good plan. The hardest thing is narrowing down what we're going to do it with, right? Because this story came from a dude that might have just been at the right place at the right time, got super lucky. This wasn't planned. And then he just wrote it as if it was planned because he's the one that wrote it. But I think that's what the biggest hurdle is like with what coin? Like everything needs to be happening at the right time, and timing is everything. So, how do we even go about looking for what coin we're going to do with? It just seems like a lot of luck involved. Something would have to just fall in our lap, like, oh, this is the one. This could be it, and then it's not until it is.
So, one way to sort of handle that is to try it on a bunch of different ones. But you sort of have to come up with a strategy in that sense where you can try it on a lot of potentials and see which one does work, because you're right, luck does play a role in this. But there are definitely things that you can look at and analyze, right? So you can look at things that have viral potential or very passionate communities, like obsessed, like where you see people that are very passionate about these things or have some vested interest or something like that. That's always going to be a good starting point for something like this. But essentially, you can be trying this in many different markets, many different cases with lots of different things. It's just the smaller you are, the smaller the market that you have to try it in will be, right? So how do you find some of these gems? Well, you can look through, like there's probably thousands of tokens being created every day, at least thousands. There could be significantly more than that. So like even just on Solana or something, there could be thousands. But you could look at these and then see like, what of these do actually have good viral potential? Like what could actually get people behind this, or what things are currently happening in the world that could coincide with this or to complement this or to help to make this viral. And then you essentially, you just have to have your strategy laid out and try some shit, find out, right? Like that's actually the only way. And it could just be luck or it could be your methodology. But the only way to know is by actually doing it. So I expect from you a one-pager on how to implement this market strategy by next week. And we're definitely not going to live stream that one. We won't be going over this in real time, how to do this.
That's hilarious. We're like sort of incriminating ourselves right now. I'm not doing it, not going to manipulate any markets, although we don't even, I'm unsure whether or not it's actually illegal to do. Sounds like it might not be, but
the famous Do Kwon quote is, "Your size is not size." He said that right before Terra Luna blew up, and he's now a wanted man across many jurisdictions. Maybe he's been arrested, I don't even know yet. But that's one of his famous replies to somebody, which was like, "Your size is not size." So he's talking about this, like the amount of money that you essentially control. And money is just like, the ability to direct causal edges or energy. Honestly, I'd be skeptical of our size being able to do any of this, but it's an interesting way to think about. But I am serious. I legit want a one-pager from you on how to implement this strategy. I'll also provide a one-pager on how to implement this strategy, but this is all hypothetical, and it will only be used to just develop our understanding of this. Okay.
Okay. All right. Sounds good.
All right. So we'll submit these. We might post them for people to view. Otherwise, Polsko, if that's all for now, we can wrap this.
Yeah.
All right. Thank you very much for listening. Hey?
I was going to say, I don't really like wrapping it up, but you got to.
Yes. Okay. So we do have to wrap it up. Thank you very much for listening. If you found this interesting, feel free to let us know. If you have other examples of cool things like this, market manipulation strategies that people have posted over the years, feel free to comment them or send them through to us. This is fascinating. I like to see insights into how the world may work or appears to work at certain times. So thanks for tuning in. Thanks for staying with us. Have a lovely rest of your day, week, night, whatever. Peace out. Love you, guy.
Peace, bro.
Bye.
Love you, bro. Peace.
Peace.
Did you get my condom joke?